Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So, this brings us closer. I am able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. On 31st August 2023, I started this experiment with US stocks. We created a boring stocks portfolio in US. The idea was to build an equal weighted portfolio in US, which we don't change. And by not changing it often, we learn how the US markets are faring, what is driving that market, what kind of companies are we gravitating towards, what kind of companies is the US market gravitating towards. It's been a very interesting experience from 31st August 2023 to 30th September 2025, 2 years and 1 month. Where do we stand vis-a-vis two major benchmarks? Before that, what are these 10 stocks that we have owned in the US boring portfolio? First, Crocs, Starbucks, Amazon, Alphabet, Apple, ESAB, PayPal, Meta, Netflix, and Costco. These are the 10 stocks that we bought. And if we invested $10,000 in each of these stocks, we would have invested a total sum of $1 lakh. What happened to this $1 lakh? Today, that $1 lakh has become $1,60,142. Interestingly, in this portfolio of 10 stocks, 2 stocks have delivered negative returns over this period. These 2 stocks are Crocs and Starbucks. Interestingly, both these companies have a very significant presence in India and a very high touch to us. And that's principally the reason why I liked these 2 businesses. Also, their valuations were giving me a lot of comfort, especially when compared to the domestic companies in India. But still, they haven't fired yet. Now let us look at what are the companies that did very well in this portfolio. The best performing stock is Netflix. It has delivered 176.5% return. If I put $10,000, it is $27,645. That's really something that's stunning. The next best performing stock is Meta, which has delivered 149.5% return. So $10,000 has become $24,820. And after that, we have Costco, where $10,000 has become $16,852, resulting in 86% return. Now, how did this happen? Because there's been a massive dividend of $1,744 in Costco. So, after Costco, you have ESAB India, which has given 55% return. And before that, you had Alphabet, which has given 79.5% return, and Amazon, which has given 59.1% return. You also have Apple, which has given 36.9% return. And PayPal, which is again a laggard in this portfolio, which has only delivered 7.3% return. Logically, I should have changed these stocks. Actually, after a year or so, we knew nothing is happening. But I still said, let's just see what happens if you travel with companies which are not the best of choices. Is there something that happens dramatically? And the US market is such a market. Just look at what happened to the ASML stock in recent weeks. See what happened to the Oracle stock in recent months. So it's a market where things can happen very drastically in short bursts of time. And the dynamics of how events change the course of companies and the trajectory of the evaluation is something that I think is still sinking into us. It's not the way it works in India. So this is something that we have learned in this period. Over this period, 62.66% is the return of US boring portfolio. The MSCI World Index is 44.22, but the Nasdaq Index has returned 59.31. Now this is over the history of this exercise. But go to the last 1 year and the story turns. The story clearly turns against the style of investing that we are trying to practice. Now, understanding that your style of investing is not working and recognizing that is fundamental to an investor's learning and evolution. And that is something that this exercise brings out openly, publicly, and transparently. What's happened in the last 1 year? In the last 1 year, the Nasdaq index has done phenomenally. It's returned 26.06% in dollar terms. The MSCI World Index has delivered 17.76% return, and the boring stocks index of US, which we created, has only delivered 12.69%. But if you look at it in absolute terms, it's decent. But in relative measurement to the two benchmarks that we are trying to measure against, we don't measure up. Why is it? We have had a big laggard in Crocs. So Crocs, $10,000 has become $5,715, minus 42.8. So that's a big fall. And again, you have Starbucks, which is given minus 8.2%. So $10,000 becomes $9,183 despite getting a $237 dividend. Dividend is not helping our style of investing. Then you have another laggard in PayPal, which has lost 7.5%. $10,000 has become $9,260. So you have three laggards in this portfolio. And then you have a number of companies which haven't done well in the last 1 year. Costco has only delivered 6.7%. So a great company like Costco delivers 6.7% at a time when the Nasdaq index gives you 26%. You need winners to fire to compensate for that. And we haven't had great winners. ESAB India also has been a laggard over the last 1 year. 6.9% is the return. And then you have Apple, which is given 12.5%. So relative to the Nasdaq index, Apple has been a very weak performer in the last 1 year. And then if you look at the performing companies, Amazon has given 23% in the last 1 year, Alphabet 24.3% in the last 1 year. And the best performing stocks are again the same two, Meta 41% in the last 1 year. And the 1 year performance of Netflix has been stupendous at 70.9%. Clearly, the Nasdaq has had more stocks firing in such a way that our portfolio simply cannot catch up. That's the 1 year performance. So now let's come to the 1 month performance. That's again giving you all the recency effects. Your $1 lakh in 1 month did nothing. It became $1,121. Whereas your $1 lakh in the MSCI gave you 4.02% return. And your $1 lakh in the Nasdaq 100 gave you 6.14%. So clearly the two indices are pulling away like crazy against our portfolio. We are not doing well. And the reasons are obvious. The companies that are weak continue to be weak. Crocs minus 7.5% in 1 month. Starbucks minus 5.8% in 1 month. Amazon minus 2.6% in 1 month. Alphabet and Apple have done very well in the last 1 month. Alphabet went up 14.9, Apple 10.8. And then you have more companies underperforming. In fact, the entire tail after this is in the red. ESAB minus 2.7, PayPal minus 3.2, Meta minus 0.1, Netflix minus 1.3, Costco minus 1.4. So those two performing stocks of our portfolio, Meta and Netflix, didn't fire in the last 1 month, whereas Other stocks relative to these in the Nasdaq 100, which are connected to AI and semiconductor, have obviously rocked. And when individual companies in an index rock significantly and you don't own them, it can be very painful. And that's the lesson that the boring stocks index teaches us in the near term. But the long term lesson is you can invest away from where the market is investing and still beat the market over a 2-3 year period. So you have two lessons in the same portfolio. The 2-year, 1-month performance beats the Nasdaq 100 comfortably, beats the MSCI World Index by a wide margin. In 2-year and 1 month, you're 60% up, but you're not doing well in the 1 month and 1 year. Let's see where this exercise goes going forward. I may make a change. If I make a change, I'll come up and tell you upfront that this change is being made. But I can tell you one thing, it's time to make a change in this portfolio before the close of the year. Hopefully, we will make some changes this year itself and keep the options to make more changes next year, because the rule that we follow in the US boring index is once in a calendar year, we can make changes on a particular month. You can't keep changing many times. So at the beginning of 1 month, on the first of the month, we need to indicate we have kind of missed that window because today you're already past the first of the month. It's not fair or ethical to make a change post haste. So I still have the option of making the change on November 1st, that is on October 31st, and posting it on November 1st. Hopefully, I am smart enough and alert enough to make that change. See you around, keep tracking the US boring index. It's fun learning together.